Now, after falling to 160 earlier this week, the naira strengthened to 159.40 to the US dollar today as the central bank continues to intervene in the interbank currency markets. For more on the Nigerian fixed income and currency markets, we now cross to UBA, where Kubi Momo, head of market risk, is standing by. Kubi, thank you so much for joining us. I guess it's a relief to see that the naira is stronger today. And so your take on the intervention we're seeing from the central bank. I do understand they sold $300 million in their regular auction, but over the last couple of sessions, we have seen them sell directly to the interbank market.
Yeah, we've seen them sell directly to the interbank market since the beginning of this week. In fact, they actually started last week. Well, we entered the week on Monday. As of Monday morning, the naira was above 162. It was about 162.3, 162.1, and those are the levels it closed last week. We've seen, I think, the greatest amount of currency depreciation since 2011.
Right.
So the CBN had to take some very serious steps to beef up the value. They've been intervening in the market. Apart from putting $600 million in at the WDAS, which was the Monday session and the Wednesday session, they've also been intervening during the day directly to the banks, and that has certainly helped to calm the market, which is what we had expected they would do.
Absolutely. Do you think they need to do more, though? Because the foreign investors are not as active as they used to be, and they've now become a major supplier of dollars as they continue to buy Nigeria's fixed income and equities. So your thoughts on how much more the central bank needs to do?
Well, the way I'm looking at it, Wale, you know, we've spoken before so many times about this war chest, because some of what, not all, but some of the reserves that were accumulated did actually come from the foreign portfolio investors. Yeah. So now it looks like it may be time to bring out that war chest for at least the next 2 to 3 weeks and keep the market calm, keep rates below 160. It was something the central bank had spoken about in the past. It was something they said they expected. The reaction we've seen this week is exactly what we thought it would be. Bang on. We're back to 159. But to keep the currency around these levels, it will take some doing. It will take a lot of support from the naira. Right. So it could come by way of putting more money through at the WDAS, you know, maybe taking the volumes up to 400, or they could continue with the intervention, which allows the funds some more flexibility on the utilization of the funds for invisible transactions. Right.
There were also some reports of some companies taking out dividends and that increasing the demand for FX. Do you think we are past that now? Are we still seeing that demand that was, of course, putting a lot more pressure on the naira?
Well, apart from companies that do quarterly, yes, we'd have expected dividend payments April to June, and we're getting to the end of June, so we don't expect that to repeat itself. I don't think there are too many companies that do quarterly repatriations. It's usually maybe midterm and then end of the financial year. So it's not likely that we should see those kind of volumes. But again, I mean, for the dividends to have had that much of an effect, we also think it's partly maybe exit from the equities and exit from the fixed income market that really pushed the naira. One set of dividends won't lead to a sustained loss over a period of a whole week, and that sustained loss in the value of the currency is almost a perfect match, a perfect correlation with the loss on the equity markets as well.
I think you're bang on right there, because clearly that is not enough to warrant the kind of pressure we've seen, and I think a lot of people have suggested that some of those foreign portfolio investors have actually been trying to take some money out. Okay, let's move on to the fixed income market. Of course, interesting dynamics there as well. We've seen a lot of volatility, but I think there's been some calm recently. We've seen yields come down a little bit, and I heard the 91 days T-bill is now at about 11.8%. Talk us through that market.
Well, on the fixed income side, again, yes, the yields have been going up. Last week, we saw yields trending almost to 14%. If you look at the mix of the bills and the bonds, there were a lot of the bond series maturities above 13%, maybe just 1 or 2 above 14%. And then the same thing reflected in the treasury bill market. We saw yields pulling to the highest levels. I think even the 91 days went above 12%. But there's been some pullback this week. You know, it's like the markets just move together, some in the same direction, some the opposite way, but they tend to move together. So just as the currency has eased off a bit in the last day or two, we've seen interest rates go down on the treasury bills a little bit, maybe back to higher 11%.
Okay, there was a T-bill auction. I understand that the results are expected today. Can you just talk us through the expectations, given the dynamics we've seen in the secondary market? How do you imagine that, what results are you expecting from this auction?
I expect a slight softening, and we're going to know the results in the next 30 minutes. A slight softening. One, because the secondary market has softened slightly, and two, because about the time the last auction came out, I think that was about the time that yields were trending up, and we had one of the highest stop rates of this year. I'm not sure it was exactly the highest, but 182 days and 364 days were both above 12%, and then I think 91 days at 11.6. So those results were pretty high. And what we've seen this year is a tendency. We have one primary auction come out quite, and then the next one a slight softening, and then it might rise again. So if you look at that trend, we might have a slight softening for this one. That's where I'm putting my bet, slight softening.
Right. Okay, so the inflation number out at 9% for May. So 5 months of below 10% inflation. I think that would give some portfolio investors a level of comfort, particularly if they want to go into the longer dated bonds. Are we seeing a pickup of demand, particularly from the domestic investors? I know the foreign investors are not that active right now, but from domestic investors, are we seeing a pickup in demand right now?
Not necessarily a pickup, maybe just some consistency. It doesn't seem to be particularly higher, but certainly the demand is there. There was a bond auction, the last bond auction, there was quite strong demand, but the amount sold was quite small. I think 24 billion versus I think 75 billion that was on offer. People must have been bidding quite high, taking advantage of the fact that yields have picked up, prices were down, but DMO didn't sell that much.
Right. Now let's look a bit further ahead, Kubi. Of course, we know that Central Bank Governor Sanusi Lamido Sanusi has just about a year to go in his term, and he has been very, very determined to keep the exchange rate stable, to keep inflation low. And many people suggest that it may be hard to find someone as determined as that, given the other all the other interests at play in the Nigerian economy, pressures, political pressure, etc. Your thoughts on where inflation would go after his tenure? I guess it's still a long way off, but this is something I think a lot of, particularly foreign investors, will be beginning to speculate on.
Well, it would depend on the kind of the next CBN governor that comes in. We could get somebody with a sense of continuity in terms of these reforms from my predecessor were pretty good. If we still have a good enough war chest, or oil prices are still high enough to continue the policy of defending the naira within a range, which has been able to work, especially if, again, oil prices are favorable, or you could get somebody completely different.
Right.
So it would, I think, depend very much on who came in next.
Yeah, good point. But I think one thing that is definitely going to be different for whoever comes in next is the dynamics of particularly the currency market, because now foreign investors have become major players in our bond market, of course in our equity market. So what you do now is you really have to think about them as well, because their activities could put all kinds of pressure on the currency.
In fact, we've seen it happen. We've seen it play out this year. We've seen it play out in previous years. But the fact that we have our bonds included in the Barclays index and I think the Deutsche Bank index, those two indices has helped a lot in terms of interest in investments in emerging markets. So that's, I think, has been positive. I don't think they're going to be delisted. So even going forward, that general interest in fixed income securities in emerging markets will continue, regardless of who the governor is. What would change might be the interest rate band and then the foreign currency policy. So those are the things that foreign investors will be looking at. Even if there was some devaluation, as long as the overall carry was positive, they would still be interested.